Marketfy Maven, create income with option spreads. He joins us every Tuesday to give his what should we call it, Dennis? His outlook on his market, his well calculated outlook on the market.
He's
Yeah,
always got good information there. We'll let Nick give us his outlook on the market first before we analyze it. How you doing, Nick?
I'm doing great. How about you guys?
Good. We're looking, we've been analyzing, I've been laying out another bearish scenario here. I know we've been laying out bearish scenarios for a while, but we're starting to get a little bit of, we're starting to look more right on these bearish calls here because we've had a slow, steady sell-off here. Nick, your thoughts on this overall market?
Yeah, I've been listening to you guys, and I totally agree with you. What you guys are basically saying is, and I think both of you touched on it one way or another, was what I've been calling price action. Every day I tell my guys and gals that you need to look at the price action relative to its recent performance. So it's kind of like a relative strength thing. And you guys mentioned levels that I totally am watching myself. And, as far as the fear that you guys have, I've had for almost about a year. But mine moves because I'm watching the relative price action, and the way I trade, it fits this trading style perfectly. So, everybody calls it range bound. And I may have said that last week that, the range bound creates a little laziness, not laziness, we get used to, bulls and bears at these levels, and we can't possibly see 2050 or 2150 coming anytime soon, for example, in the ES or the SPX. And then we get comfortable in this, and we set up a lot of trades over and over, and they work, and suddenly, bam, we get blown out one way or another. So it's a little dangerous, and it's a little concerning to see these sell imbalances that you mention and you tweet, and I'm watching. But doesn't it seems like the imbalance is there, but are the ticks there also, or is the price out immediately as soon as it gets published?
Well, you want to know, and here's a point here too, is those imbalances, those closing imbalances are publicly disseminated at 3:45, but those start coming out on the floor as early as 2 o'clock. And there are some services where, the little retail guy can actually subscribe to the early imbalance data look too. And so really this information is starting to come out as early as 2 p.m. So when you start to see the action start to turn down at 2 p.m., sometimes those imbalances can already be playing. So by 3:45, it's very old information. So at that time, sometimes it's already crowded and maybe the other way. And you say, oh, well, there was closing imbalances. Why did we, pop in the last 10 minutes? Well, sometimes it just trades just get crowded the other way. But just the overall trend of 7 days, and we've seen some weakness in the overall market too, which kind of coincides with it.
I agree. And what we need is what bulls and bears need are leadership. And Apple yesterday had the opportunity to lead. But then again, everybody expected the WWDC to deliver almost nothing because statistically 9 out of 10 times, whatever they said, it goes down on that day. So why do we expect it to go up? So this drip down in Apple is not helping things because it's the best company on the planet, supposedly.
Yeah.
So it needs to be a leader. Same on the bears. There's no leadership. Nobody's pressing the market down. You don't feel it. But the bulls are quick with the trigger finger. Hey, I want to book my profits and get out before I get, before I lose all of it. So it seems like there's no leadership. There's no conviction. We're pretty high. We feel like we want to correct somewhere, but the data is okay, so we shouldn't unless it's a headline-driven move. So we're kind of stuck. We don't have any fundamental drivers one way or another. I mean, what's fundamentally going to take this market to the next level up? I don't see anything except that, we've been up here on financial engineering for a lot of it and some good, strong companies, but it's not broad and it's not things to come. It's things we've seen that could continue. And then on the opposite way, we have all these potential problems, all these potential bad headlines that could explode at any point in time. So I may see a positive relief pop soon if we kick the can down to March 2016 in Greece, for example, and maybe we'll get that potential headline off our radar for a little bit, and then we'll have more room to meander again. But until then, I'm nervous, you're nervous, Joel's nervous, everybody's nervous.
Nick, I just want to talk to you. I mean, I know you got a good feel for the turns of the market, and boy, the psychology since 2009. Buy the dip. And here's a pretty significant dip in the S&Ps, all-time high 2134. I talked about the roll going on this week and how you sometimes see some strange price action. What do you use like to buy the dip? I mean, I know you're short some call spreads and you have some exposure to the downside of the market. Do you just have price targets that you look for,
Mm.
or do you have feels or something
What?
you look for in the transports? What's your like? Why isn't this the dip to buy that says we're going right back to all-time highs?
Well, that's the thing. It's becoming a if you're a range trader, if you know your ranges, or if you follow the market and you get a feel of the price action, then it's a matter of picking your points of entry on the short side and on the long side. On the short side, I've been building credit call positions for about a year now, and I just keep closing the firm profit, closing from profit. And I'm more short than long. And what I do with the longs is I pick my entry points on dips. And as far as where do I jump in at 2070, 2080, 2090, 2100, where do I choose it? Is based on the weekly ranges that I publish every week for the members. And I do a lot of homework based on open interest and support levels and just general feel of the market. And I say, okay, maybe the 2050 to 2150 range is viable. Where can I find spreads that I can sell in order to offset my existing positions? So all new positions go into my portfolio to balance out my portfolio. Therefore, I have better conviction they're already hedged. So I do have some leeway. So I can put a trade on if it takes heat for a couple of days and can take it off for no overall effect. So that's how I'm doing it. I just study the range, and it's been paying dividends so far this year and last year. And if you're just doing it willy-nilly based on feel and not looking at the breadth of the market, that's really intraday. If you're watching the breadth, that should give you a clue if you should start catching that falling knife or not. If the breadth is falling down and you get a little uptick, not the time to catch it. You let it uptick because it's going to turn right back down intraday and continue on down. That's not the bottom, but then you can see it inside the internals of the market.
Nick, what are your thoughts here on crude? We haven't asked you this for the last couple of weeks here, and we haven't been talking a lot about crude. It is up $1 here today. We obviously are way off the lows here. We pulled back a little bit from the 62, 63 high area. What are your thoughts on crude here as we look at, coming into the summer here, months here?
I really don't know because it is manipulated, so I can speculate. I thought once it hit the early 60s, it could slide up to 70, closer to 70, based on technicals, but that didn't happen because there were OPEC meetings, et cetera, and I think there was rhetoric the last couple of weeks also on where they feel is a good balance on price. And so the fundamentals don't apply anymore. It's a matter of who you know, what you know as far as internally there, and I don't have any insight there. So the crude thing, and here's another thing. You asked, is this the top or is this an inflection point? A whole bunch of, the market used to trade with or against something. If you remember last year, we had a period of time where if the TLT and the yen rose, you had a down market and down rates. It was clear. It went on for months, and then sometimes it flipped the other way, and at times we were running against crude, and sometimes we run with crude. Well, now there's no consistency. Even intraday, one thing moves this way, market moves with it, and then it turns around. So and usually those are inflection points. I'm not saying that we're going to have a debacle. I'm just saying whatever range bound we had, we may have some sort of a correction or some sort of a downward trend rather than an upside trend. Like the last couple of weeks, we had upside setups in the markets, meaning last week, for example, the small caps had a mega breakout setup. I mean, all they needed to do is just walk through the door. In the IWM, for example, they failed. Same with the RUT. They bet on the 1300, then they couldn't get there. That happened several weeks before, too, and for a long time, and they just couldn't get through that door. So maybe they're a little tired and they need a breather. I'm not calling for a correction, but I'm not chasing the pops either. Buying the freaking dips, as they say, is no longer a sure thing, but they do come in and buy dips. For example, if Apple loses not $10, will it find buyers? I bet it would. There's no disaster coming, but if they
Yeah.
want to rest a little bit,
Yeah.
why not?
Gotcha, Nick. Okay, you're always good on the momos here, and you like to
Mhm.
follow them because I know you like the premiums in them. And out of the momos, the only chart that's looking pretty good here is Tesla. Now,
Wow.
a Baird analyst, and I know you're not a huge fan of this stock, but I know you can give me a unbiased opinion here. Broke out yesterday here. What's your thoughts on Tesla?
Tesla surprised me. Price action, it was putting in a rising wedge, which up until the 2-day candle, the last 2-day candles, it looked like it was going to break down and probably head to the 230 area. But yesterday's move was incredible. Obviously, it was in the news. So the open interest shows that it has some resistance at 255, stronger at 257 and 260. So based on the open interest, it may have moved as much as it's going to move this week. Having said that, there's a headline probably coming out today that will prove me wrong. But based on the open interest, what the markets expect, that's what I see. Some sort of a little magnet at 250. So where's it at now as far as price action? 256, yeah. So right there, it should have no reason to go any further than here. Okay. Based on the open interest.
Okay, so for the longest time, you've been pounding the table and you say, don't short Netflix. Is it time to short Netflix?
I shorted Netflix by buying cheap puts for a disaster there, based on just a hunch, nothing more, nothing less. Fundamentally, if they're really serious about going into global markets and China, for example, how can I short it fundamentally? Technically, I'm holding puts.
What are you
really
holding?
Cheap,
what are you holding?
Really cheap.
600s?
What?
What are you holding and when?
Like 580s, 570s or something. It needs to be a disaster in Netflix, and just based on pure hunch, I'm not calling for it or anything. Don't tweet it. Said I'm shorting.
Can we put it in a
tweet? It's a lottery ticket. Just money down the trash.
How far out, Nick? How far out? How far out are you going on that?
I think they're June. Hold on, let me make sure. So I have a few days left on it. It's a complete lottery ticket.
Roll them over, Nick. Roll them over.
Why? It's a lottery ticket. You can't return a lottery ticket.
I wish you could.
Yeah. Nick, are you still collecting premium price line here? Because this thing just keeps chopping in between 11.50 and 12.50 there. And I know you were doing some credit call spreads and credit put spreads before on this. Are you still collecting premium price line?
I stepped away from it because I felt like it had a move in it one way or another. I had a circle around 11.25, and it may still get there. And if it does, maybe I'll do it then. But it's been like it hasn't given me a reason to. I needed to see punch out or punch down, and then I jump in or out. So I've stuck to the indices mostly just because it's been so easy. So I have had no reason to chase anything else to avoid the headline specific on stocks. So the indices have been an easy play for me. So I haven't found no reason to chase anything else seriously other than that. And a few lottery tickets here and there. But the indices have been money with regards to credit spreads and iron condors all the way. Lopsided ones, they don't have to be, the spirit of one. For example, if I'm short the SPX this week, I can go long the small caps 2 weeks out to balance out my portfolio. It doesn't have to be exact iron condors. Iron condors, we've talked about it before, is where you short and you go long, so you're trying to range bound the trade for a period of time, and you collect premium for that. So it's kind of a self-hedged trade.
Just for our listeners here, I got a real good level here, Nick, and I want to get your take on it. I mean, I see that 1160 print here in the pre-market. That's an odd lot here. But look at that. You got the low from yesterday of 1162.09, and then you had the recent low of the move. The lowest it's been since it had that pop towards 1280 has been 1161.56. Now, would you be inclined here, like if a weak market goes busting through that level, would you look for continuation on the downside, or do you like to buy your puts or sell your credit call spreads when the stock's showing a lot of momentum to the upside?
I have 1125 circled on my chart.
Okay, so you're sticking with that.
As long as it's not there or not too far away from it, I'm not going to do anything with Priceline. The open interest on Priceline is really not very reliable because it's not heavily traded that way. So I won't use that as a gauge. I'm just using it as a feel of how long I've been watching the stock. So when it falls hard and long. And if I feel it's going to if I have a circle on 1125 at one point or another in the last month and a half or so price action, maybe it's not technically a head and shoulders, but it kind of feels like one because they tried to poke and then they failed, and they tried to poke higher and then they failed, came back towards the neckline. The third poke failed worse than the second one, so you got some sort of a head and shoulder. So 1125 is a circle I'm watching for. If it comes, then I'll start to nibble long with a credit put spread. And if it doesn't come and it runs the other way, then I'll start setting up a credit call spread if it still warrants that.
One more stock here for you, Nic.
Sometimes it's okay to miss a trade.
That's a good point there too. That's actually an excellent point. And always to swing. That's the one thing you see everybody trying to swing at every pitch. Only pitch swing. Warren Buffett always says swing at the pitch. You know, it's up the middle. So, Shake Shack. I want to know your thoughts on Shake Shack before we let you go. This stock has actually had 2 days of tight consolidation here after being very wild here, selling off 2 weeks ago. What are your thoughts on Shake Shack?
Never been. I've never been, so I can't opine that way. And as far as price action, as long as it's holding the outside trend, the upward moving trend of sorts, what is it now? It's like 77 or 70. Yeah, 77. So I would not want it to see it lose the trend, which will put it at like 75 or so. If you extend it in time in the next couple of ticks. So if it doesn't lose that, then hey, I hear good things about it. It's too short of a time frame to develop any kind of beat on it. I can't personally chase something this frothy. There's so many more tickers that are more worthy of my personal time, not because it's just not for me, but trend-wise, it needs to hold the trend. So it's been rising and falling, but it's keeping an ascending trend. And as long as it doesn't pierce that on the way down, it should, bounce off of it and continue on back higher.
We've been on the line with Nic Chahine. He's a Marketfy Maven and the author of Create Income with Option Spreads. Always great to talk to you about the broad market and options market with you, Nic. Great input. We hope to speak to you again, or we will speak to you again next Tuesday.
See you again.
Thanks, Nic.
Thanks, Nic.